Ladies and gentlemen, in this video, we have a lot of news to share, including a 245% tariff on China. That is, well, not true. A lot of people saw this headline. It circulated on every major news wire, and that sent stocks lower in pre-market trading and really for the day today. Now, we also had a speech from Fed Jerome Powell, and anytime Powell speaks, it is critically important. I will share those details with you in this video. Not to mention, retail sales came in better than expected, showing the consumer, well, is holding up. And of course, we will acknowledge the over $5 billion essentially tax that Nvidia is going to be hit with in this quarter. That's going to turn Nvidia earnings not so great. That is also a big story of why markets were extremely volatile today and traded lower. Jerome Powell says the U.S. economy is solid despite heightened uncertainty and downside risks. Jerome Powell says economic impact of tariffs likely larger than expected. So far, larger than expected tariffs likely mean higher inflation and slower growth. Powell says the administration's policies are still evolving and effects remain highly uncertain, meaning we don't know what's actually going to be imposed. Jerome Powell says we are well positioned to wait for greater clarity before considering any changes to policy stance. And I think that's why stocks sold off on this speech from Powell. I think people were kind of expecting a more dovish Powell, a Powell that's more accommodative to the economy, and it's not really what we got. Jerome Powell says that growth likely slowed in the first quarter of 2025 from last year's solid pace. Jerome Powell says we can't have a strong labor market without price stability. Powell says sharp declines in business and household sentiment, as well as elevated uncertainty, is reflecting trade policy concerns. And Jerome Powell says we may find ourselves in a scenario with mandates in tension, meaning the economy could weaken and inflation could be too high for the Fed to confidently react to it. Jerome Powell says the labor market is solid, broadly in balance, and not contributing to inflation. And Jerome Powell says strong first quarter imports are to weigh on GDP growth. He says that PCE prices likely rose 2.3% in 12 months through March, core PCE estimated at 2.6%. Powell says inflationary effects of tariffs could be more persistent, depending ultimately on inflation expectations. And the Fed's obligation is to keep longer-term inflation expectations well anchored. And he reiterates again that they are well positioned to wait for more clarity for the time being. So we got largely the same old Powell that we got before, although I would say the last Powell that we heard from sounded a little bit more concerned about the economy, not as concerned about inflation. Today's Powell sounds right in the middle, just not willing to draw any conclusions. They're there if things get weak. They may have to hold course longer if inflation remains higher and tariffs are negative on inflation. Like right down the middle is what I would describe Powell as right now in terms of focusing on protecting the economy and making sure inflation does not revamp higher, which it does seem like based on the market's reaction, they were expecting Powell to be a little bit more dovish, to maybe lean into cutting rates at the May meeting. The probability for a rate cut on May 7th last week was about 35%. Today, after Powell's speech, it's 12%. So it's dropped 70% or so in just the last couple of days. So basically, Powell's not in a rush to save the economy with what could be inflation looming ahead from these tariffs. So first and foremost, according to the Wall Street Journal, the U.S.'s plan is to use tariff negotiations to isolate China. Now, I have a very interesting opinion, as some would call it, on what Trump's goal is with China. Okay, I don't think it's to cut off China overnight. You can't do that. That would have serious financial repercussions, right? To keep these tariffs on China. I think Trump wants to pressure China to sell TikTok, sell half of TikTok. Why? Because I think it's really good for his legacy. Like he was the guy that saved TikTok. I mean, that's likely what's at play here. Now, of course, there's some aspect of protecting critical minerals and semiconductors and the auto industry, blah, blah, blah. There's some component of that, pharmaceuticals. I think Trump wants the U.S. to be in a position, if we ever did go to like a physical combat with China, we would be self-sufficient, right? But I don't think the idea is to nuke U.S.-China relationships more than it is get a TikTok deal. And I know that might sound stupid to a lot of people, but I think that's what's going on here. And the more pressure you put on China, well, maybe the easier it is to negotiate. China's not really caving yet, but we do have like 85 more days where tariffs are paused on other nations to continue to put pressure on China to come to the table and negotiate. Now, this is the big headline that kind of set markets lower today, but it's not true, okay? It says China now faces up to 245% tariffs due to retaliatory actions, per a White House briefing. There was no new tariffs put on China today, okay? None. What happened is you have the 25% tariff on China today. There is a 20% tariff additional for fentanyl. So that's 145% right now. There is an additional 7.5% to 100% tariff on certain things. That brings the total to 245% on certain products. But the headline blanket tariff rate is not 245%. Okay? This hit the headlines today like it was a new tariff. It's not. Nothing today has changed. But considering that, as I talked about in previous videos, I mean, that's essentially like doubling the China tariff. And markets, well, really didn't go down much on it, right? Even if that was true, I think it highlights something important for investors to realize. We have already hit peak fear, okay? As long as we get deals done, then I think markets could fall, but I don't know if you're going back to the lows. If we go back to the lows or we fall, hit new lows, it's going to come down to what happens in the economy, not tariffs at this point. When the markets stop reacting to bad news, that's usually a sign that stocks are getting ready to move higher, that a bottoming process has started. Now, all things equal, I think if Nvidia was not down 7.5% right now, the S&P would be green today, okay? Hammock said today, it is not appropriate to respond to every twist and turn of markets. U.S. officials plan to use trade negotiations with more than 70 nations to ask them to disallow China to ship goods through their countries and prevent Chinese firms from being located in their territories to avoid U.S. tariffs. So this is according to the Wall Street Journal. It's not really confirmed by the White House, but people are going to take this as definitive. Keep in mind, it may not be. But if it's true, the U.S. is just trying to put a lot of pressure on China. Fed Hammock says the economy started the year strong, but recent signals are mixed. And the big headline from Fed Hammock today, before we get into Jerome Powell, is if growth falters and inflation eases, the Fed could cut rates even quickly. Fitch says they have cut world growth forecast for 2025 by 0.4 percentage points and China and U.S. growth forecast by 0.5 percentage points from their March forecast. Bloomberg had an interesting opinion on Trump tariffs today, which it's hard to disagree with. They say, quote, in theory, Trump is trying to use tariffs to force a revival of American manufacturing, but companies already can't get enough workers for the U.S. factories they do have. I mean, how true is that? Like, are you really going to get a bunch of American citizens to go sew clothes in a factory every day, all day, for years and years, maybe the rest of their life? Probably not. I mean, there's no amount of money in the world you could pay me to commit my life to doing something I hate every day. That is the biggest injustice you could do for yourself. I don't care if they're offering you $1 billion a year, 10 billion, 50 billion a year. I don't care. If I'm miserable every day doing a job, I'm not going to do it. I would be miserable sewing clothes next to thousands of people every day for the rest of my life. You couldn't pay me to do that, okay? There's no amount of money that would make that worth it. That goes for stamping metal or other boring, repetitive jobs. You couldn't pay me to do that, right? Not because it's difficult. I'm sure it probably is, but you couldn't pay me to be unhappy. And I don't think Americans are going to do a lot of the jobs that Trump is trying to bring back to the US. That actually makes a very strong case for AI, specifically for robotics. This whole tariff situation, if you really want to onshore, is super bullish for humanoid robots longer term. Bank of Canada's Governor Maclean said today, we did consider two options, hold rates or cut by 25 basis points. Fitch Ratings says we expect some additional U.S. tariff revenues to be recycled back into the U.S. economy over the next 18 months, including through tax cuts. Fitch Ratings today also said that we still expect the Federal Reserve to wait until Q4 2025 before cutting rates despite deteriorating U.S. growth outlook. And Fitch Ratings says today, world growth is projected to fall below 2% this year, which would be the weakest since 2009, excluding the pandemic. JP Morgan says U.S. households are more invested in stocks than ever, and it's distorting market valuations. California's Governor Gavin Newsom says the state will sue Trump over tariffs in an attempt to stop them from going through. Per the AP. The suit will argue that Trump's use of the Internal Emergency Economic Powers Act to impose tariffs on Mexico, Canada, and China, or a 10% tariff on all imports, is unlawful. The de facto U.S. Embassy in Taiwan says U.S. congressional delegation is visiting Taiwan this week. Singapore's Deputy Prime Minister says U.S.-China tariff escalation is extremely worrying and says that companies in Singapore are already being affected. And finally, before we get into specifically what Jerome Powell said today, look at the retail sales report for March. It came in at positive 1.4% versus last month at 0.2%. So good number, actually great number, versus expectations of around 1.1% positive. So this shows the consumer, they're still out spending. It's kind of what Bank of America and really all of your banks have said this earnings season, that consumers continue to spend. Until they don't have a job, they're going to continue to spend. Now, I think tariffs are interesting there because if tariffs do go into effect and if trade deals are not as good as we would hope, then what companies are going to have to do is raise margins internally. There's really two ways you can do that. Obviously, become more efficient in your operations. And there's like 100 different ways, 2,000 different ways you could do that. You could use AI, right? You could get better shipping lanes, oil prices fall, blah, blah, blah. The other way you can do that, which is pretty simple, is just fire people. You're not seeing a ton of that right now because of tariffs. What you are seeing right now is companies don't want to invest much. They don't want to make big capital allocation decisions while this tariff uncertainty is ongoing. But they're not going out and firing people just yet. And I think it's really going to come down to trade deals, whether or not we do see that happen. Now, retail sales year over year came in at positive 4.6%, beating the estimates of 2.6%. Retail sales excluding autos month over month came in at 0.5% versus estimates of only positive 0.1%. So basically, any which way you look at these numbers, they came in what you'd say better than expected. Besides industrial production month over month, that came in at negative 0.3% versus estimates of negative 0.2%. So that was a little bit worse than expected. But generally speaking, this was great report today. Business inventories month over month came in at positive 0.2%, meeting expectations. And the NAHB housing market index came in at 40 versus expectations of 38. So that was also a little bit better than expected. Again, Bank of Canada interest rate decision. They were not expected to cut rates. They did not cut rates, but as I showed you in the prior Headline, they were considering it, which I don't think is too important for our markets, but worth mentioning. Now, the Atlanta Fed GDP Now model, excluding gold imports, is now only negative 0.1%. Before today's retail sales report, it was negative 0.3%. So you didn't get some big blowout, crazy, upside number, but it was enough to almost push us positive. Again, excluding those gold imports. Now, the headline number for the Atlanta Fed GDP Now tracker is negative 2.2%. So you very well could already be in the start of a recession. You can also see that chip stocks are under pressure today. Nvidia, AMD, and really anything in that AI chip sector is not having a good day today. Nvidia warned that they're going to take a $5.5 billion charge tied to exporting its H200 graphics processing units to China. AMD warned of a $800 million hit as well, and ASML reported earnings today. They missed order expectations and said tariff restrictions create demand uncertainty. Across the board, this is just not good. Okay, we don't know what's ultimately going to happen from this, if it's going to be resolved or if this is something that's going to be with us. But I will tell you, it does lower the bar a lot for Nvidia earnings. It does lower the bar for AMD earnings, for chip earnings, and really for AI earnings, which, yeah, sucks today, but it's going to be better when those companies actually report. Because, if Nvidia is taking a $5.5 billion hit and we know about it up front, that's probably better than Nvidia just whiffing on earnings. And then we're all like, what the hell happened, right? What's going on with AI? Is AI over with? Blah, 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 bubble bursting kind of fears. Hopefully that makes sense. Now, as far as tomorrow, we have building permits and housing starts for March. Initial jobless claims, expecting that to come in a couple thousand higher than last week. Around 227,000 is the expectation. Philadelphia Fed Manufacturing Index, continuing jobless claims. Philly Fed CapEx, employment, new orders, and prices paid. Tomorrow, you also have a 5-year TIPS auction. That is Treasury inflation protected securities. So that's kind of a way that markets can measure the inflation expectations. Fed Bar speaks at 11:45 in the morning tomorrow as well. But the big story is really going to be around earnings for tomorrow morning, because tomorrow morning you get TSMC. Now, TSMC is going to tell us a little bit more about broader demand for semiconductors. Nvidia, AMD, as I previously mentioned, all of your semiconductors are pretty much destroyed today because of some of the tax-related burdens that they are being hit with. But it doesn't tell us much about actual demand. TSMC will give us a little bit better of an insight of what semiconductor demand looked like from your, Nvidias and AMDs, the likes of those kind of companies, which will tell us a little bit more about how AI CapEx is going. Now, Netflix reports earnings tomorrow after the bell. They do tend to move markets a lot normally, but I don't think it's going to be as big of a market mover this time around, because it's all about tariffs. It's all about recession risks. And, well, Netflix shouldn't be like a super tariffed company. So I don't think we're going to get much out of Netflix. So let me know what you guys think about all of this down below in the comment section. I will just say as I end off this video that, in terms of the markets, I think you've already hit peak fear. And while there is going to be chop, there is going to be up and down volatility, I think it's important to remember that in the short term, markets evolve around fear, right? They trade around fear and what this could mean and what that could mean and blah, blah, blah. Longer term, they trade around earnings. So you really need to know what you're doing in markets right now. If you're in markets for the long term, none of this matters. If you're trying to game out what the next headline is going to look like, keep in mind, I think we probably already hit peak fear when the S&P was down 21% from all-time highs at 482. Now, to really fall to a new low from here, I think you need to see the economy getting worse. I think you need to see recession fears start to grow. And with the retail sales report we got out today and bank earnings, there's not really much to be concerned with right now, I think, based on the consumer. There's obviously weakness, but they're continuing to spend. kind of in the same boat as we were previously. Now, if people start to lose their jobs, that becomes a bigger issue. That becomes more of a, oh crap, let's get ready for recession kind of thing. And that happens when tariffs go into effect. If they're too large, if companies are not able to raise costs or raise, prices, they're going to have to lower costs internally, and that could mean firing people. So let me know what you guys think about that down below in the comment section. Have a fantastic rest of your day, and I will see you in the next one.